All right, we'll get to these FDIC insurance questions. This is from Mike in Tennessee, but many people wrote in about it.
Oh, yeah.
You talked about FDIC insurance for bank deposits up to $250,000. You implied that you should not trust advice about going above this amount if you have different deposit categories. If you go to the FDIC official website, it says joint accounts are insured up to $500,000. If you have a beneficiary listed, it adds $250,000 for a total of $750,000. Should I not trust this information?
No, you can trust this information. What I was talking about when we did our special edition show Sunday night with the bank failure issue is that you cannot trust what anybody tells you who's a bank officer, who's at one of those overpriced fancy desks they put in a bank, any of that stuff. The only thing you can trust is the up-to-the-minute briefings from FDIC, which we have for you at Clark.com. And you can see this works as a green light situation that'll get you beyond the 250. This is a red light. This will not work. And the other twist with the FDIC thing is there are certain situations where you think, oh, that's fine. I can do this and this and this and this. But it may not be cumulative. And you'll see what I'm talking about as you look at joint and individual accounts, how much total coverage you have. But this is one of those things that there's an old expression, don't even know what it means, but too cute by half, meaning that I don't want you to put your money all in a single institution trying to play these games, because I much prefer that you spread your money out. One of the reasons that I've always been a fan of that is that if you take the convenience of putting your money all in one place, you're giving up the opportunity to earn more on your money by having the money you need to operate on in your principal financial institution, whether it's a credit union or a bank, but the money you don't need immediately be in good, higher earning savings account somewhere else, potentially, likely, typically with an online bank, with CDs. I have a CD from my credit union that I did recently that's a 5%er. And I talked about that on the podcast. And there are a number of those out there. Well, if I just left money in the main place I have it, I wouldn't be earning the 5%. So you want to be flexible with your money. But the short answer is, yes, it's true that there are things you can do by the way accounts are titled that in a single institution you can go beyond the $250,000.
Another familiar saying, don't put all your eggs in one basket.
Yes,